Jeni Browne. Welcome to the next in our series of Meet the Lender. And this time around, I'm going to be joined by Kitt Makwana, who is Key Account Manager at Aldermore Mortgages. Now, Aldermore are a lender who were one of the good things that came about from the credit crisis. So they were sort of started lending, as it were, as we came out of the credit crisis. They were the first challenger bank, and they've really been doing a fantastic job. They do all types of mortgages. They do homeowner mortgages. They're actually very, very strong in the homeowner space, and they've also been doing buy-to-lets and also commercial as well. So a really good kind of range of mortgages. What you'll find is that whereas with some of the account managers that we've been interviewing, they will be sort of able to talk about bridging residential and buy-to-let mortgages. At Aldermore, the account manager tends to stick to one speciality. So in this case, Kitt is really going to be sort of focusing on buy-to-let for you today. But Aldermore, fantastic lender, really great offering, and I'm really excited for you to hear more about it. Kitt, thank you very much for joining us today. How lovely to see you. Hope you're well.
I'm very good, Jeni. Thank you for having me on your channel today. I'm really looking forward to answering your questions and addressing anything that you need me to cover today. Happy
Brilliant.
to.
Thanks, Kitt. Okay, right. So you know that we have like set questions that everyone has to answer. So we're going to kick this off by asking you, who would you say is a typical borrower for Aldermore?
Yeah, that's a good place to start, in fairness, Jeni. I mean, with Aldermore, we've been around for a long time. So our client bank and the type of borrower that we work with has grown massively over the years. So right now, the kind of borrowers which are typical of Aldermore at the moment, we work with a lot of first-time landlords all the way through to professional and portfolio landlords. So that's our market. So someone entering the market for their first ever buy to let, all the way through to someone who are remortgaging 30 properties. And so we're able to help a wide range of clients, whether they're individuals or if they're setting up a special vehicle like a limited company for investments, we're able to help. But we're also able to help clients who've got trading companies as well. So we know that there's more and more trading companies who are looking to diversify their income streams, which is great. We can help them invest in property without them having to set up any particular kind of vehicle to do that. And one of the key differences that we have at Aldermore is the fact that we don't need any property related SIC codes added on by the accountant for your clients either. So if there's happens to be a printing company who want to diversify their income streams, we're a lender that they can come to via MFB to be able to provide lending directly to that business. And so, as I say, all the way through from first time buyers to experienced investors, we can help everyone in between.
Amazing. Actually, it's interesting that you talk about the trading company thing, because when we talk about lending to trading companies, and you gave a very good example there of a printing company, and that's absolutely kind of a good, could be an example. But actually, what we found is that if a borrower has a property company where they've bought a couple of properties, done them up and sold them, some lenders will actually treat them as non-SPVs because they're doing property development. So actually that's where trading company, where it's not an obvious example of a trading company, but where that we've used you guys for that ourselves. So very good.
Okay, no problem.
Thanks, Kitt. So look, in that case, obviously trading companies, you've given away one of your USPs already, but I'm still going to ask you for another 3 because you're not getting off that lightly.
No problem. Well, the trading companies was going to be one, but I'm happy to provide 3 others. So so one of the things that we are good at doing, apart from the trading company side on this side, one of the things that we see a massive gap in the market for, we don't see many lenders fill in this space, but one thing that we would do is that we would do day one remortgage for a lot of clients. So your investors who are buying property in cash at auction, we are happy to be an exit on any short-term lending like a bridge that they're looking for, and we will allow day one remortgage for these clients up to 80% on a standard buy-to-let. So, I mean, in fairness, Jeni, we speak to clients about this a lot and speak to brokers a lot. there aren't many clients who wake up in the morning and say, do you know what? I want bridging finance, because we understand how expensive it is in the marketplace, but it's important because it helps them buy that property. But also, what we do at Aldermore is that we help them exit that bridge immediately. So, sometimes at auctions, you have 28 days. So there's a time constraint, and bridging lenders are vital to the UK property market. But to come to us and to be able to exit alone at that point is just phenomenal. So that's a big, big piece of work that we do. And on all of our buy to lets, it's a free valuation on a standard buy to let, along with assisted or free legals as well. So that works really well. Um, and another kind of a selling point, as it were, for Aldermore, I mentioned standard buy to lets, but as a bank, we're also big in the market for things like HMOs, which are housing multiple occupation, along with multi-unit freehold blocks, whereby a client may have a block of flats and we'll allow them to remortgage four flats, even if they're on the same title. So we do a lot of business for like that for clients via MFB again. So with HMOs, we'll go up to 6 beds, and we also offer free valuations on all HMOs. And multi-unit freehold blocks, we can accept up to 4 units as well. So that works incredibly well. And the third one is going to be our multi-property proposition, which I know I touched on previously. But with us, your clients can literally have 2 to 30 properties on one application. So from a lending perspective for MFB, it means one application to make. But more importantly than this, for your clients, it means that they can actually consolidate up to 30 properties on one application, which means they'll have one direct debit with one start date, one end date on one account number, up to 30 properties. And the good thing with this is that the problem properties or the lower yielding properties that clients may have, they can blend them in with the rest of their portfolio, and we will be able to capital raise up to 75%. And one of the things that we do is that we don't need to see proof of any onward purchase. We understand that landlords need to be quite agile in the marketplace. And so one thing that we will do is that allow them to capital raise on their portfolio without needing to see proof of what that money is going to be used for. So as I say, it just makes landlords and professional landlords just a lot more agile in the marketplace with how we work. There you go.
Very
Yeah.
nice. Very good. Right. I'm just going to go back to the first point
Yeah.
that you made with regards to your day one remortgages.
Mm.
So I know that we have lots of people who will be watching this thinking that's really, really interesting that you guys can do that.
Yeah.
2 questions. If someone has bought a property and it's gone up in value and they're coming to you after, say, 1 month of ownership, do you lend against the price they've paid for it or the value of it on the day that they make the application?
We lend on it on the day of valuation. So not on the application, but on the day of valuation. So to give you an example, Jenny, one of the cases that we run recently was a client who bought a property in cash for £350,000. When it came to valuation, the estimated value was £400,000 for this property. Our valuation, which as I say is free of charge, came in at £400,000. We were able to lend that client 80% of £400,000. So we lent them £360,000 on a property that they paid £350,000 for. So, and that client was delighted because these products are very few and far between in the marketplace, but it's always market value, Jenny, and not the purchase price. But as I say, as long as it's an arm's length transaction with no relationship between the buyer and seller, we're happy to go to 80% on things like that. Yeah.
Lovely. Thank you. And the other thing I just wanted to touch on, because I actually think you've got another US, I mean, you've got loads of USPs, right? But one that I'm surprised you haven't mentioned, but I wouldn't mind getting into just for a moment, is your free legals.
Yes,
Because unlimited companies, actually, do you know what? Even on personal names, when you're doing a remortgage, because you don't do free legals on purchases, it's only remortgages, right?
that's correct. Yeah.
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 So when you're doing a limited company remortgage, the legal work is actually really expensive if you're paying for it
Yes.
yourself.
Yeah.
So the fact someone can come to you and have free valuation, free legals, and no arrangement fees on some of your products in the limited company space, you're the only lender offering a fully fees-free offering.
Absolutely. And do you know what? That's something that you asked for 3 USPs. They were at the front end, and but when a case does go to offer, it's amazing how many clients are thinking about what the legals are going to be like. And you're absolutely right. So in personal name, it's free legals that we offer all the way through to completion, and assisted legals or heavily discounted legals for limited company applications. And one point I would add on that is that although we have our own panel of solicitors, all external to Aldermore, who we work with, your clients are free to choose anyone they wish as long as they're registered on Lender Exchange. So if one of your landlord clients has a particular solicitor that they've worked with, know, trust, and have a relationship with, we don't want to ruin that. That's important that we don't ruin that. But if they're registered on Lender Exchange, which most solicitors are now, or they can be quite easily, we'll let them use their own solicitor firm as well. So we've enhanced it even further to make it easier and more comfortable for landlords to use us, and that's what we're trying to do. So good
Wonderful.
shout. Thank you for
Nice.
picking me up on that. Yeah.
I'll find you some more USPs, don't worry. Right. So obviously you guys are looking to do lots of lending and you've got a really, really broad policy. And I can obviously say from first-hand experience that you guys do have a very broad policy, but you do decline applications, like all lenders decline applications.
Yeah.
What would you say for Aldermore is the most common reason that you guys have to decline applications at the moment?
Yeah, again, a good question. So there's probably three key reasons why we decline. So I mentioned earlier about the property types that we look at. So standard buy-to-let, HMOs, and multi-unit freehold blocks. Now, sometimes a property will come in as part of a multi-property deal or as a standalone case, and we won't know the details of that property. As a bank, we tend not to lend above things like takeaways or noisy commercial or next door to noisy commercial. So occasionally we do decline cases because of the property type, not because we're worried about the client, but just due to the property type. So and but there's ways around this which I'll cover. But at the same time, when we decline a property, we try and give the client as much information as possible. So we don't like doing just no, this property isn't suitable for us. We try and give a bit more information wherever we're allowed to as well. So property type is number one. Secondly is adverse. So occasionally we do see clients who are coming to us and they've got a level of adverse sometimes that isn't immediately seen when the case is actually sent into us for initial assessment by MFB. It's not always seen, but sometimes in the background there's adverse on for other companies they may own or other directorships or other shareholders that they have. We've got to be careful about the adverse. The one thing about Aldermore is that we're only interested in the last 3 years of your client's credit history. So anything that's historic in the background, that's fine. It's only the last 3 years. So occasionally we do have to decline cases because of that. And thirdly, linked to the trading companies and adverse is sometimes the structure of the entity that we're lending in. So you mentioned earlier, Jeni, we're quite broad in our criteria and who we can lend to, which is great. It really is. But sometimes the structures that we see are, dare I say, a little bit too complex and too layered for us. And if they're too complex or too layered and we're almost losing sight of the security or who we're lending to, we won't do it. And so we give a polite no and we give a reason why in these scenarios because it's fair for both the client to understand and also for MFB to understand about finding the right home for their client. That's it.
Could you give me an example of what that would look like, a company structure that I think these days, when limited companies first became like a real thing after
Yeah,
Section 24,
yeah,
the company structures seem to be very, very straightforward. So it used to be limited company owned by a husband and wife, and they were the shareholders, and that's kind of as you know, detailed as it got. Then for
mm,
some reason, I think it's something to do with HMRC kicking off.
yeah,
Um, Directors' loans, so loans from company owned by husband and wife as trading company, be made to a totally separate limited company they owned. That sort of fell by the wayside. Now we have these layered companies. So we might have a holding company which owns the trading company, and it also owns the SPV, or the SPV is owned by the trading company owned by the people. So things have got more convoluted over time.
absolutely.
And
Yeah.
then we have like estate planning, where people are starting to try and put their kids in as shareholders. And yeah, it's sort of
Yeah.
moving, which is brilliant that people are actually, you know, taking a negative like Section 24, finding a solution, limited company, and then actually working with that to kind of make it even more beneficial to them. But I think sometimes people are given advice to set up company structures which are great from a kind of taxation perspective, but actually not
Yeah.
necessarily great for getting a mortgage. So
Absolutely.
what would be one of the sort of structures you think that you've seen where you wouldn't be able to accept it?
Well, I think it's well known, there have been structures which have been kind of advertised on things like TikTok, for example, about how you can do an LLP and then move it to a limited company before lending on it from a lender like Aldermore. These are little tax loops that, as a bank, we don't like because there's a reason they've been set up, and legally they're correct, but morally and ethically, tax hasn't been declared or paid on property. So we wouldn't be comfortable in these kind of scenarios. Secondly, when we see lots of B and C shares available as well, and we can't see sight of who the security or the shareholders are, that makes us slightly nervous. And when we see directors and intercompany loans, which we will accept to a degree, but we do need to know where the source of that money comes in from and where it's going to be repaid back to as well. So, and there's other things like trust, for example. Again, when there's a trust involved as well on a limited company or a structure that we're lending to, we wouldn't be comfortable because the trust can be quite fluid and flexible and can be adjusted quite easily once the lending has been done by Aldermore. So these are all kind of structures that we come across, which are always open to interpretation. At Aldermore, we like simple, straightforward lad companies. So if you've got a holding company, a limited company, and then a SPV underneath that, and we can see the directors and shareholders, that would be absolutely fine with us. It's when you've got a holding company and then various directors and shareholders across different entities all the way through, and then there's an SPV underneath that. As I say, we just lose sight of our security. So that's one of the things that we wouldn't necessarily be comfortable with. So that's just a
Gotcha.
brief example of the kind of things that we have seen come into Aldermore. Yeah.
Yeah, that's great.
Yeah.
Thank you for explaining. I shall take my layered limited company to an offshore trust on the BVI to someone else
Absolutely,
then.
absolutely. And things like BVI structures, I know they're very, very sorry for your audience. I apologize, Jenny. A BVI is a British Virgin Island structure. So overseas structures, unfortunately, it's not something that Aldermore can help with. But please do speak to Jenny because she's your lady to know who she
I
can speak
love
to.
that.
Yeah.
I love
Yeah.
that. Thank you. Uh,
Brilliant.
right. So moving
Yeah.
on to making applications. So people who are watching us talking today
Mm.
are going to be at some point needing to apply for a mortgage in the future.
Yeah.
And I can sort of say if they're applying to Aldermore, but actually all lenders broadly ask the same questions and look for the same documentation and all that
Yeah.
kind of stuff. So in terms of advice, if someone was going to apply for a mortgage with Aldermore or somewhere else, what one thing do you think they could do to ensure that the application goes through nice and quick and smoothly?
Okay. Do you know what? One of the key things that we always encourage all clients to do via their broker, via MFB, is open, honest communication. Talk to us. Talk to Aldermore via MFB about your applications. And if you think that it's relevant, it probably is. So, I mentioned earlier about the property types that we've, declined. So if you're not sure about the property, please tell us about the property prior to application, because our our credibility is key. And if it is a no and we can't actually help with this property, Jeni will find a home for your property. So I know she will. But as I say, please talk to us about things like the property, company structure. If you're not sure about any credit profile or adverse that you may have in the background, open, honest communication means a far more simplified route for you as the client, the broker, and us as well. So no one in our industry wants a long drawn out no because we weren't made aware of the information up front. So as I say, we just ask you to be as transparent as possible with everything that you feel is a relevant fact that's going to impact lending. So that's all. And no one's gonna mind if we can't lend. We just want to create the right environment and right scenario, and be trusting that when that case comes in, we've looked at the property, we've looked at your credit, we've looked at any of the structures that we're looking to lend to, and in principle, we're comfortable with it prior to application. It makes a big difference to our
Yeah.
application numbers. Yeah.
Do you know, it's funny, I think in years gone by,
Yeah.
people, if someone, for example, this is just a totally random example, if someone was, for example, the director of a company that's gone into liquidation,
Yeah.
it wasn't necessarily the case that a lender would find out about that, because they didn't
Yeah.
have the information wasn't as easily accessible. Whereas these
Mm.
days, lenders can find out everything, all the
Yes,
linked
it's true.
addresses on your credit file, looking back
Yeah.
at other companies' direction, all the things we've kind of talked about. And it's amazing how many people still kind of wonder what they might get away without telling people. Whereas these days, everything is visible to people that want to find it. So that's
Yeah,
really good advice. Thank you. Right, your
absolutely.
next
Yeah.
question is, Kit,
Yeah.
we have the much anticipated, I'm trying to make it sound as positive as I can, renters' rights bill going through at the moment, and probably going to be passed into law in the very near
Yeah.
future. Are Aldermore looking to change the way they lend? Is their risk appetite going to move? Do you see it impacting the way that Aldermore lends money to buy-to-let landlords?
I think the short answer is yes across the industry, if I'm honest with you, Jenny, because I think, like you say, there's the Renters' Rights Bill is a piece of legislation where there's a lot of speculation on at the moment. There's lots of rumours and there's lots of change that may happen. But as you say, it's not fully been introduced as yet. But as I say, the short answer is yes, we do think it's going to have a major impact on the market. It may push lenders, especially lenders like us in the buy to let and portfolio segment, into possibly being a bit more conservative or just being a bit more risk aware. So potentially, Jeni, the way we underwrite cases, how we risk and price risk as well, and possibly how we structure products as well. But we understand there's going to be a lot more potential uncertainty, and not just from lenders, but we're also talking about the landlords themselves as well. So if there's going to be any changes in any potential income streams or rental income streams for landlords, slower recovery when it comes to adverse events, more compliance, possibly more regulatory risks for landlords, do they want to be in this market? So we think that there will be some changes. But I think it's important to note at this stage, Jeni, that we don't feel it's going to be an overnight kind of shock and this is what's going to happen. We feel it's going to be a lot more gradual into the market, but we do feel that there's more exposed lenders who will probably be adjusting their pricing, adjusting their risk appetite first, and then the wider shift will probably happen as the market kind of beds down and understands how the Renters' Rights Bill and the other legislation comes into play. But as I say, we just don't expect an overnight kind of thunderstorm. It will be gradual, but the market will need to settle down. So, but we do see some changes coming, if I'm honest with you. Yeah.
Do you know
Yeah.
what? I'm really impressed because you're the only lender who has said that you're expecting things to change. Everybody else has just said, no, we can't, we don't think things are changing. And I actually do understand that maybe right now they haven't agreed to make changes.
Yeah,
But actually, until we see the impact in real life of the renters' rights bill and what that
yeah,
does to the performance of payments of tenants, and maybe it won't be, massively different, but actually if there was, for example, a situation where suddenly landlords were
mm,
stuck with non-paying tenants for 3 years, of course lenders are going to have to kind of think about how
absolutely.
that impacts them. So I do
Yeah.
appreciate you actually being honest about that. It's
No,
fantastic.
exactly. Our job is it's really hard to forecast legislation that isn't live yet. So we understand how tricky it is for landlords who are entering the market, but also established landlords who might be slightly anxious about looking to grow their portfolio. And yet we speak to landlords every day saying, yes, I need to buy more. And yes, I want to buy more, which is amazing because they're providing housing for people that need housing. And we love that. But at the same time, it's really hard for us to give a firm answer, Jeni, on what legislation looks like when it hasn't fully been introduced yet. So you can speak to one of my counterparts in one of our key competitors and get a completely different answer. But my honest view is that it will change the way lenders like Aldermore and others in our space will end up pricing risk. So it's going to happen, I feel. Yeah.
Thank you.
Yeah.
Thank you. And that segues beautifully onto our final question, which is, how do you see the future of the PRS?
Okay. Well, the private rented sector is and has been for a long, long time a mainstay of the UK property market. There's no doubt in the marketplace that the private rented sector is critical for the UK property market. We understand that. But it goes back to the last question as well, whereby, we do expect a lot more regulation and then possibly a few more professionalized and consolidated landlords as well. So the bigger landlord we feel would always be there, but the legislation and the future might mean that the smaller landlords might end up exiting the market, which I think is a shame. Tax pressures, compliance, and the smaller scale landlords that might say, actually, I may not want to do this anymore. But conversely, we see applications every single day and we complete on cases every single day for first time landlords. And I think that's absolutely awesome. So, but the landlords that are coming into the market right now are, what's the word I'm looking for? They're a lot more educated about what the past has been, what the present is, but also what the future looks like. So it's really interesting seeing the type of landlord entering the market. Still young, still people with money to put down and looking to invest and grow the UK property market. But I think the quality of the landlord is changing. But it also means that still be a rise in both the portfolio and professional landlords who are looking to still capital grow. So we understand this. But with the rise comes persistent demand, I think it's fair to say, but also a bit tighter supply in the marketplace. So property prices, the way they are, I know the forecast is that it's still going to be increases in the next 12 months, but mortgage rates and demographic shifts are going to have a big impact as well. So, I think a lot depends on the government and how they want to do this and how the Bank of England views swap rates. But demographics of the people entering and staying in the UK property market is really important. And we still see that happening as well. Okay. But as I said before, heavier regulations, so slightly tighter rules on evictions, rent increases, the standard of property with the EPC ratings that lenders like ourselves look at on the property that we lend on. But we do see that lending itself and the investment property side will evolve because I just think some lenders are becoming a bit more selective in how they're looking at lending and who they're lending to. But when it's like a a higher risk portfolio or a client who's actually proven to be non-compliant with legislation, they will probably be phased out the marketplace. But the professional, keen, young, and up and coming, but established landlords will always be in the market. And I think it's fair to say that the UK property market, especially the PRS, is a lot is transitioning to be a lot more tenant focused. But yeah, maybe a few more barriers to entry moving forward. But one thing that we feel at Aldermore is that the long-term stability of the private rented sector will always be there. And as I said at the start of this question, it's still a mainstay of the UK property market. So we're looking at the market with interest, but we're quietly optimistic about how it's going to look in the next not just 12 months, but 5 years, 10 years, 15 years. It's still going to be there because people still need places to live, Jeni. So and we want to help landlords invest, grow, and look at ways to do that as well. Yeah.
That is such a beautiful way to end this. What a lovely positive note. Thank you so much, Kitt. I really appreciate you taking time to come and have a chat with us and talk to everybody about what Aldermore have to offer. I really, really appreciate it.
It was an absolute pleasure. It really was. So we understand, as I say, that the importance that your clients have to both us and to your company and to yourself, Jeni. And we want to provide these kind of guidances, and they're not always going to get the answers that they want to hear from me, but they'll get an honest answer each and every time because our job is to help grow the UK property market, and the buy-to-let sector is just awesome, and we are quietly confident it's going to carry on growing the way it is. Yeah.
Brilliant.
Next day.
Kitt, thank you so much.
No problem at all, Jeni. Anytime. Thanks again.
So there you go. Another huge thanks to Kitt for joining us and telling us all about Aldermore there today. If you have any questions, we'd love to hear from you. 0345 345 6788. Have a look at our website. Also, feel free just to leave a little comment in the box below if you have anything you want us to ask lenders going forwards, or any lenders you particularly like us to have a chat with on your behalf. Thank you so much for having a watch or listen. We'll see you again next time.